The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another excellent edition of the Power Trading Hour with me, your humble, lovable, squeezably soft host. And we got a market a little bit up, a little bit down, a little bit of country, a little bit of rock and roll. And, what can you say? We're off 4 points on the S&P cash. We hit a high of 2046 on that today, so we're 8 points, 12 points lower. But just 4 points off on the day. No big deal out here. Volume's not all that exciting. 2 billion shares as we start the show on the New York Stock Exchange consolidated tape, so volume is not all that exciting. We have a few things going on that I think are kind of starting to tell us that we're going to get some movement. All week long, I've been pretty much sticking to one story, and that is that we aren't going too far too fast in front of numbers tomorrow morning. We probably should have at least a little volatility tomorrow. My guess is right now, and I'm going to cover it in the last segment of the show, so those that can't take any political content whatsoever can turn off the last few minutes of the show. They can listen to the rest. But I'm going to talk about the political implications of what's going to happen next week. And I have a feeling the more I look at it, the more that the market will probably see the numbers come and go tomorrow and then look for what could be a epic battle politically next week. I was talking to somebody on the phone today, and it really didn't gel until that moment. But it was that the market likes gridlock. It doesn't like an all-out nuclear war. And I suspect that somebody's ready to set off an atomic bomb, which will probably mean mutual assured destruction. But again, I'll handle that in the end of the week with also the outrage of the week and what the news for the majority, let me put it that, majority of the news has ignored this week. But it is going to be interesting nonetheless. But I think maybe a little bit of movement tomorrow, and then maybe the market's just going to focus on the political implications of next Tuesday and Wednesday. And then the big long-term issues that come about because of that. And it's going to be interesting. Like I said, easy to know what a market does with gridlock. Unsure on the way a market reacts when one side decides to drop a nuclear bomb and whether the other side will react in turn. But we may have more volatility from politics next week than we've had in a long time. What else do we have going on out here? Anyway, like I said, not much of a market. Wasn't a lot of volume on the way up. Wasn't a lot of volume on the way down. We were 4 points lower. I kind of thought we were going to be in a trading range of something like 2020 to 2030. And we got about another 10, 15 points higher than that, probably a little bit lower. But my guess now is people that had and were sitting on profits, short-term profits, probably going to take a little bit of them off in front of the numbers this morning or tomorrow morning. But those numbers probably not going to be as big as I thought to begin with. But we'll take a look at it. But I'm not expecting a lot of movement in the markets themselves. And for people that get my newsletters know that we've pretty much been going after one thing, and that is stocks that are either incredibly cheap or stocks with high short interest or stocks that are maybe have a decent option on them with huge short squeeze potential. Actually added one as a long today, even though I thought the market was going to come back. I wanted to see some relative strength throughout the day on it, and it's starting to do that. And that's exactly what you look for in a short squeeze, and that is stocks like Tesla. We'll look at that later today. But a good indication of a stock that's being defended and also that has high short interest is Tesla. We'll take a look at that in a little bit. Today in 1980, the NASDAQ Composite Index closes above 200 for the first time, finishing the day at $200.25. It has taken the index 9.5 years to double from its starting value of 100 on February 8th, 1971. I bet everybody before that didn't know a lot about the market just figured the NASDAQ was around forever. It wasn't. This day on February 8th, 1971. In fact, I didn't know that. I knew that apparently the NASDAQ started at some time, but never knew what it did actually. Other stuff. We talked about Taylor Swift this week and how bad the streaming business is. Of course, there's only one public stock that really trades on that, and that is Pandora. It's been pretty ugly. Apple has been trying to get into this business, and everybody keeps telling me how much money there is in it and how great and noble and incredibly brilliant Apple is because of their Beats acquisition. I say nay. Nay, 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 do I say? I'm going to have to get into a little rhyming here today. But anyway, the reason I say this is we continue to see the back and forth between Taylor Swift. Spotify would have been smart to just shut up a couple of days ago. They basically said that Taylor Swift would make a great deal of cash and kind of lied about it. So the CEO of Swift's record label actually came out and said that the singer had earned less than $500,000 from Spotify streams in the United States in the last 12 months. I think he said $5 or $6 million. So by a factor of 10, he lied. Now he'll say, well, I really meant what she gets all over the world and not just this, and that she's going to get $6 million, but that I forgot to tell you that included all the radio stations that play her music. And it is interesting, but I hate a business that basically says that as long as someone gives me all the stuff that I need for free, our business model works. And whether it's Pandora or Spotify, which I love, or any of the other ones out here, or whatever Apple's going to call their thing, I guess they're going to roll it into iTunes. An incredibly, horribly bad business. It was okay for iTunes for a while, why people were actually buying stuff, but even then, it severely cut the amount of money that record artists were making. But kind of interesting to see. Usually, when everybody tells you to lay down, you ought to. I just don't understand the point of lying about what these artists make. Like she wouldn't come back and respond. All you have to do is look. I mean, all this stuff is published. You can see what people are making. So when I heard him say that, I chimed up yesterday. Nice that they responded. Not really saying that one side is better than the other than one side's business model is basically, if you give me all your stuff free, my business will run. I just don't see how any of these places make any significant money in the near future. I've said that maybe this is the next airline business where it takes 30 or 40 years for them to figure it out. But even then, I'm wondering how long or when it will be that the airline business goes back to the ways of the commodity business it had forever. It's only a matter of time before someone starts offering a discount. Then they all start offering discounts. And then the whole airline business is right back to where it started, at least in my opinion. Streaming music, probably, as soon as someone else decides to start charging, like Spotify did, or no, it was Pandora did. Then Spotify does. Then another one decides that they won't. So then Spotify has to give up on the thing, and they put the ads back in. And, it's kind of a thing of tiger chasing his tail out here. But For the life of me, it's hard for me to see Pandora doing anything but going bankrupt in the near future. Sharp is going to have some super high density displays coming out. Always thought that Apple's one big problem is it always relies on others for its displays, and most of the parts that come in it via the hardware, hard for Apple and their iPhones to be significantly different than everybody else. Their differentiation is, of course, in software, but they sell hardware. And that is the problem. They're selling something that physically exists where they're trying to show you something virtual, which is the software. And that is it. But it is tough. What else? Anyway, this new display is going to be huge. Of course, if anybody's been looking at specs in the last while, Apple doesn't like to quote specs. They like to say the new Retina display. And who knows what that means. The display actually has so many colors, has such a brightness, has so many pixels by so many pixels. But where we're looking at about 525 pixels on the highest end phones today, this new Sharp ultra high resolution display will have 763 pixels per inch. And this one, the first display is a 4.1 inch, and they're going to be making also a 5-inch display. But look for the pixel wars to continue next year on the smartphone business. What else do we have out here? Keep an eye on the markets. Just a little eye. Oh, well, back down to the lows out here, down $7. So we shall see. What do we got going on? Okay. Still in my trades, just keeping an eye on them. Yesterday, Google's ad server failed. A lot of people made a lot of hay over it. I wanted to see and take a day to see whether anything would actually change after today, and it has not. The problem appeared about 9 a.m. yesterday. It resolved around 11:30. Of course, when you have a single point of failure like Google, when they go down, then the internet pretty much goes down these days. And they figure that somewhere between $10 and $100 million went away in a brief 2.5-hour period because Google was gone. For those people that have ever read the computer in their car, they know that there's always some kind of error that pops up with that little light coming on. And those errors are P errors. Been around forever in the electronic industry. But when it all proverbially hits the fan, the excrement hits the fan, the worst error you can get is a P0. And whatever happened yesterday, that's what popped up all over the internet. P0. The blue screen of death. We'll be back in a minute.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Think or Swim, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And coming back. Anyway, we talked about Google, so time to go on to the next thing. There is a article out by Paul Singer, and it's pretty good. I wanted to just read it because I thought it was some of the more powerful stuff out there, and history says that he is correct. The question is just when. There's a current set of delusions that is powerful and dangerous, that monetary debasement can be infinitely pursued without consequences, that the financial system is now solid and sound, that the low volatility and high prices of stocks, high-end real estate, and bonds are real. The bonds are safe haven, and that large financial institutions which get into trouble in the future can be unwound in a much safer way than they could in 2008. And if there is a problem with this market, it is the bulletproof mentality that many have out here, and that's what worries me more than anything, the belief that a market cannot go down. As we know, that is always the prelude to a giant folly. Anyway, we're off 7 points on the S&P cash, 2.17 billion shares. So volume picked up a little, but not enough to make me think that anything's happening before we get the numbers tomorrow. I've been working fairly hard at buying either very inexpensive stocks and or options today in my daily newsletter on stocks with huge short interest. I bought some calls for December on a stock that's got, I think, 13 or 14 days to cover. And the question is, am I going to be right? And the answer is, I think I got a 50-50 chance, which doesn't sound like much of a bet other than it's probably a 5-to-1 or 6-to-1 bet if it pays off. So, yeah, I'll take a bet like that every time, 50% chance of winning and a 6-to-1 return. All I got to do is make sure that I don't bet it all at once. As always, options are a way to reduce risk, not take much more, and not take more on. Unfortunately, the worst part of people out here using options is always to take more risk on and to take more leverage on. And it is a warning, and it is the equivalent of the sirens singing to, what was it, Hercules, or Achilles. It's one of those dudes. All the dudes with the leather sandals and the dresses running around back then, where they all tied themselves to the mast when they went by a point where the siren song would lure men back in, and of course they'd crash their boats on the rocks. And I'm wondering if LSD didn't actually exist back then, because these guys thought manatees were mermaids, and would believe that women could sing to them and suck them back into and back on the rocks. I think a lot of people were high. I just don't know what they were using back then. Anyway, one of the reasons or nice things about penny stocks is, you've got your risk. You pretty much have your back to the wall. They either go bankrupt or they don't. Unlike options, they don't expire as long as they don't go bankrupt. And you can have a fairly low-risk trade that pays back rather enormously. And I've made some fairly considerably huge money over the years by trading these. But normally you have to have a market that is set up for that. And it's not uncommon, especially at the end of a market, to see that the penny stocks run rather hard. In praise of pennies from heaven. 7 words that you can't say. I just thought I'd end this segment with something that you would know. If you look through the news, you might find it. It's not actually 7 words. There's a few more words that you can't say at a Chick-fil-A. I think it was in Atlanta. But apparently they've hired huge amounts of morons that can't talk if it didn't, and can't talk or relate to each other if it didn't come out of some horribly bad rap song. So they're banning several words. Bae, bra, on fleek, 300, goo, chill, cuz, Ebola. Apparently everybody's at the places telling each other that they've got Ebola, calling each other's fools. Anytime they say if something was done, they said about a week ago, and nah, salty, or ratchet. And apparently being a ratchet is being a diva, and the worst thing that you can have these days is be a ratchet, and apparently also being a ratchet diva, you have a BlackBerry as part of that. And I thought that being a ratchet and having a BlackBerry, kind of interesting. Anyway, we'll be back in a minute.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And as we come back, I've worried a little bit about Amazon, and we'll look at the chart of it and a couple of the others in a minute, that Amazon and Hachette have made a deal with each other. It's unclear exactly what the deal is. It hasn't been published, but Hachette is saying that they get full control over e-book pricing. And it is interesting, to say the least, that this has been going on for so long. If I was Amazon, I would want to put this to bed a long time ago. And that is, Andy says, oil has broken the 2011 lows. Just in. I haven't been watching. What do we have here for crude? Just in. This is Thursday, isn't it? So Andy's out there tonight. What do we got? Where's it at? $74.26. Anyway, after months of, and probably 6 months of yelling and screaming back at each other. Amazon, which I thought would be under a cloud, and that cloud would have been that they got into an antitrust argument with the government, is problematic. But anyway, they put it to bed. Hatchett says they have full pricing over ebooks, and I think at least Amazon, if I read this correct, has at least dodged a bullet with the antitrust. The problem is now if anybody else wants to do it, they probably have an avenue, and Amazon, for whatever reason, has decided that there can only be one pricing schedule for books. People sell less books, no big deal. At least no skin off Amazon. If they don't buy that book, they'll buy another one. But to me, Amazon's policies, especially in that book segment, still leave them open to problems with the government over antitrust. This may just put this off for a little while. I didn't see what they were doing. Let's take a look at some charts here real quick. I wanted to look at Tesla first, TSLA. The reason is that, what do we have here? The reason is that we were talking about how short stocks operate. And it's not uncommon, especially, it's not up that much. It was up to 255 today, but it's still higher than the open, still higher than yesterday's close. That is Tesla. And one of the interesting things, especially in a short stock, in a stock that's entering a short squeeze, especially toward the end of the year, you want to watch stocks like Tesla because they'll teach you a great deal if you haven't tried to be on these stocks. Of course, the long term is fairly much down on Tesla. It pretty much has failed. It's now going to come up. But the problem is it's got 40% short interest. So what do you do with something like this? Well, it's almost impossible to short. A lot of big hedge funds that don't have to write home every day and tell them why to the wives and say, hey, I didn't make any money today because I was short Tesla. They can sit on these things for 6 months or a year or 2 years, however long takes it to fall. I think Tesla's probably worth $40 too. The problem is, as an individual investor, are you going to sit on something for 6 months while this thing plays around up here? And I don't think it's going to be 6 months. But my point is that these things can hang out for quite a long time before they actually fall. Now, this has done just about everything that you would think it would do, which is it's come back here and filled this whole gap. But you still have that 40% short interest on this stock, and that's going to be very, very difficult not to take into the end of the year. But probably one of the biggest things I would say that you want to look at is markets like today that are down a little bit. Did the stock with high short interest end up going down or closing lower than it opened or closing lower than it did the day before? My guess is you're going to see Tesla over the next few weeks and into the end of the year just do this slow drip, drip, drip higher. And, on that, you're going to have an issue being short. But 40% short interest, there are a lot of people that could care less about the long term on Tesla. They see that 40% short interest, and they think it is a license to feed the shorts buckwheats. If you don't know what buckwheats are, they're slow, painful beating. And that's what you will feel like if you don't have a long-term outlook and are trying to short this now. I would recommend that you wait until they squeeze at least a great deal of these shorts out and then look at taking it again. I'm thinking that they could move this up to 280, even on light volume before the end of the year, and maybe even see a move higher than that. And you get absolutely no volume other than every once in a while the stock will bounce another $5 higher. You'll see a lot of volume, and that'll be the people shorting it. When it gaps, and there is no volume, and it does a immediate reversal of those huge bounces, and you don't see anybody willing to cover their shorts, probably a good time to set the hook on Tesla. Let's take a quick look at Amazon, AMAZN, and we'll look at that. Do we have any questions So Amazon. Okay. You can give me a call, by the way, at 877-927-6648. That's 877-927-6648. I hear you dialing right now. How many kids do you think don't remember what a rotary phone sounds like? Anyway, Amazon. Now, this thing's back up to its previous high, and the volume is not all that bad. It also came down on heavy volume. That heavy volume was on the down to 284, and normally I would say the same thing. Amazon, not quite the short interest that Tesla, but I still think it is extremely problematic to try to short Amazon going into a big Christmas season where they're going to do nothing but have a daily barrage of press releases telling everybody just how much they sold every day and how it's so much bigger than last year. And again, it doesn't matter that they sold more. It depends on whether they kept more. You can give all the stuff you want away. And we saw that with Best Buy last Christmas. They did everything. They were doing tons of business. And what they do right after Christmas last year, well, they told everybody, you know what? We did a lot of business and we didn't make any money. And the thing craters, what was that thing on the 15th of this year at $37.04, and you wake up the next day and it's $26.30 at the close. That's pretty much all you need to know about these kind of huge gap downs. Not only does Amazon need to make sales, it needs to make profitable sales. And the question is, can they flip it that way? Anyway, some other stocks of interest in the meantime while I'm waiting for either your questions or your phone calls is what's going on out here. Okay, so we're off 4 points again. Had another test of the low at 2030 on the S&P cash, low a day anyway. It doesn't look like it broke it. And we're back to pretty much where we were, 2.3 billion shares. So, again, I don't see anything happening out here other than some market gas. A little Tums. I think that's what the market needs to settle its stomach. But probably just a little bit of back and forth into the numbers in the morning. What else do we have out here? Abbott Labs. Kind of interesting to see this thing come into a long-term gap. And when you see this one, it's pretty huge. I think there was some kind of split or something out here. But it's back up to this level. I have to go back and figure this out. But probably more interesting to me is the short term of this thing. And some of these stocks, we'll look at the IBB next. But certainly the September 19th high out here, $44.20, 6.1 million shares. And, of course, the most we can get out here is about 3.1 million shares. So is this about as good as it can get? Yeah. Can we go up a few more percentage before the end of the year? Yes. Is there high volume lows everywhere? Yes. But I'm still thinking that these things don't get resolved until next year. IBB, take a quick look. Of course, this has gone up and had a nice little break. IBB, of course, broke its previous high, did not have a sign of strength, has a higher volume low out here back in the October 15th level at 247. It's pretty much going sideways, not a lot of volume up, not a lot of volume down. But again, it always depends on what is the most important force that we're looking at. And to me, it is, we got 45 days until the end of the year. Is it more likely that all the shorts that are hanging out on this are going to cover their shorts before the end of the year? Or is it more likely that everybody's just going to start selling and paying their taxes this year? And all things being equal, you're going to have to get some kind of event moving out here, the market. And I don't see anything moving the market politically, maybe next week, maybe a little higher tomorrow on numbers when they come out, because I can't imagine the numbers are really going to get ugly or much better before the end of the year. So for the most part, the question is, Can you get somebody to pull the trigger and sell before the end of the year, even if these stocks do nothing but go sideways? My guess is that you're going to see these highly short stocks continue to go up a little bit every day. You're going to see some of these others do something else. What else do we have going on here? I wanted to look at some other stocks. And again, I'm giving you a little pre-warning. I'm going to talk a little politics and how it affects the market next week. If you can't stand it, then after this segment and the commercials, please listen to our sponsors. You can change. I give you permission to change the channel, because after what I play, you're probably going to be a little mad. But again, probably well worth getting a little mad every once in a while. Lincoln National Corporation, look at this thing out here. It's gone up to its previous high of September 19th. And no, I'm not going to play a disco album. I'm not going to make you that mad. September 19th, $56.36, 2.8 million shares. When we were back up here November 11th, $56.78. We've gone above it. We've closed below that high, and the volume hasn't come in. But again, most of these stocks, just like I've been talking over the last few days, the energy wasn't all that bad on the way back up here. And that means that you really don't have a lot of weak stocks, although they may have quit going up. Doesn't mean that they have to go down. La Quinta Ends. Now, this one I was looking at the other day. The IPO lockup on this has pretty much gone sideways, or expired, let me put it that way. So you do have probably a weaker market out here for La Quinta, a lot more shares available out here. What do we have out here? But what can you say? 780,000 shares on September 8th. 3 days ago, we had on November 11th, we had 380,000 shares today. Last few days, not a lot of volume in the stock. Of course, the big hotel chain out there, and if the economy still keeps going very strongly, and with maybe prices falling for gasoline, maybe you have a few more traveling salesmen out here, but kind of hard to see. We were talking about some of these stocks that have hit highs. Vertex Pharmaceuticals was one. I would have likened the volume to shrink just a little bit more. It is one of the few stocks that's really pulling off its highs out here, maybe because it had so many days up here at its highs with no volume or lighter volume. But volume was off 25% on this one from the September 29th high at 116.88. When we see this one at 1.5 million shares, it certainly is problematic. But down, not a lot of volume today. So it is kind of hard to see a lot of these things out here making a lot of sense. And some of these actually have had volume back up into these highs, or energy back up into these highs, but given it all up here at the highs for volume. Constellation Brands, I keep watching this one. Little pullback today. July 2nd high, $94.77, 5.7 million shares. We've gone above it yesterday. We're going to close back into the trading range with 1.4 million shares as of yesterday. So way off that 5.7, but was the energy all that bad on this leg up? The answer is no. And my guess is you're going to see these things kind of play around. We're going to get some news around Black Friday, and we're going to see these things probably a little higher into the end of the year, but not much higher. Not enough to make me think that I want to go long a lot of these stocks unless they have huge short interest and some natural buyers. We'll be back in a minute. Remember, I gave you a warning.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, Life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. When you first learn something in life, you have the most questions as you begin to apply that knowledge, which is why Steve Rhodes came up with the idea for his 7-week trading program. It all begins Saturday, November 22nd, when Steve Rhodes will host a live 3-hour morning workshop where he'll teach his attendees the precise methodology he uses when placing trades. You'll then receive 6 weekly updates each Monday morning discussing the possible alerts currently setting up in the market. Steve will then bring everyone back together for a final 3-hour live workshop Friday, January 9th, where he'll discuss the methodology that went into each of the 6 weekly updates, making sure that you're confident in applying what you've learned so that you can begin navigating the market on your own. You can sign up right now for this entire 7-week trading program with Steve Rhodes for a one-time payment of only $395. If you're a Mastering Probability subscriber, then you can save an extra $100 off that price. For all the details, visit the front page of TFNN.com right now.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
As we come back, I gave you fair warning this last segment would be have a little political content, in fact, a lot. We've found out this week that basically probably the biggest spending bill ever was a lie, and everybody knew it was a lie. People that said it was a lie when it happened were ridiculed. Now we have videotape of the architect of that lie, and if I get time here, I'll play it. To me, the whole thing is, and the markets are about, normally looking for whatever's next. Tomorrow we have some jobs numbers, but I don't think that's going to do a whole lot. I think we're going to have a little bit of movement. My question is, what happens next week when it's probably going to be Tuesday or Thursday when we have all-out war? I know what the market likes to do when there's gridlock, but what happens when somebody decides to take it one more step than gridlock and start probably getting awful close to being all over that Constitution and just starting to ignore it? That's going to happen about next week, and it is problematic. And other than that, I don't see a great deal that can really move these markets before Thanksgiving. That is going to be extremely problematic. But I keep seeing, we're off, 2.5 points now today. I'm wondering what it is going to take out there to do it. And short of politics, is there anything else out there? War, anything looming? Everything seems to me to be kind of to wear it down. And that is going to be extremely tough to get going. And again, I keep on looking at this market. I keep on seeing what's going on. And it looks to me like a market that is in the doldrums, that is extremely tough to get going one way or the other. You certainly have a problem moving this market. So that's going to be about Wednesday. After that, there isn't a great deal until we get into the Black Friday numbers. So what do we do? What do we do into next week? And, other than that, is there a lot moving out here? So I'm back to my thesis that I started earlier and probably for the last 2 weeks. Is there a whole great deal out here happening? Other than the short squeeze, the initial roll of the market is slightly higher every day. We've had our attempt to go lower here today. Didn't have a lot. Again, we got the numbers in the morning. So if we'll be in studio tomorrow so you can give me a call. But if you can think of anything that's truly going to move these markets over the near time future, I'd appreciate it. I'm having a hard time seeing other than my thesis, which is a slow and drip up, 5 points, 6 points. Maybe we get a pullback like today. It ends up being a whole lot of nothing, and then we're up a few more points before it. I don't see a lot of impotence to go much higher. And again, like I said, almost all my positions out here are looking at the at a short squeeze is probably one of the few ways of making any cash before the end of the year. Well, I don't have time to play the clip here. I went too long. But I'm sure everybody can go look for it if they want. It's to me, there isn't a whole lot going to happen. And I think it's going to be problematic at best. We got to get this market moving, but it's hard for me to see what does it. We'll be back in a minute. Oh, Tom O'Brien Show. So when you can, not when you have to.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.